and good to have you with us in this edition of the Urban Debate. Tonight we're going to start off the conversation by talking about mehngai. The price rise has hit the common man yet again. And what makes it worse, viewers, is the fact that this price rise, this inflation, hike in prices, everything that we consume, buy, becoming costly is coming at a time when the economy is down and out. When our salaries aren't really going up, when our businesses are down and out, so income isn't going up. When there is a big question mark over the future of our jobs, when unemployment is at a very, very high rate. And at that time, when our incomes aren't growing, when our financial additions aren't growing, our spending is under pressure. The retail inflation has jumped to 6.3% for the month of May from 4.23%. And you would have read this everywhere. Retail inflation at a 6-month high. Now, a big part of this is the high fuel prices. Fuel has a large weightage in the retail inflation, and that's led to this big jump. The other important aspect is your food prices. Now, some of it is seasonal. The other is because of the demand supply. Third, because obviously even to take food from one place to the other, you need fuel, and so the transport costs go up. And that's a big factor as well. Wholesale inflation, which has some more categories included in it, that index has seen a steep rise. Wholesale inflation actually is at 12.94% for the month of May. The food inflation, your food basket, which you obviously can't cut beyond a certain point. You can make some changes to it, but you got to eat food. That inflation is now above 5%. Fuel and power inflation, 11.6%. And this will begin to hurt us more as India unlocks and the demand and the consumption of fuel goes further up, whether it's in industries or our own travel, everywhere. This will now begin to pinch us. Health inflation at 8.44%. The opposition obviously is using this as a tool to target the government, with Mr. Chidambaram saying high marks for competent economic management to the government. That was his sarcastic tweet as he quoted all the rising prices and the index. But why is it a big concern? I want to come back to that point. For example, the Reserve Bank of India, the central bank, has a band, a target that the inflation should be in this category. And if the inflation rate, the rate of increasing prices is within this window, then they are comfortable with it. But if it begins to go beyond it, which it is now, then the Reserve Bank of India will need to start looking at its monetary policy differently. And so that's where it becomes a concern, because then they may not cut your interest rates. This is something that the industry and even borrowers, retail borrowers, often look towards. High fuel prices, I don't need to tell you what that does. Personally, to your own bills, it also adds to your daily essential bills because of the transportation costs. And high prices are also a big dampener on the economy. It restricts the scope of interest rate cuts. So let's talk about this. Let's talk about whether this needs any kind of intervention. What can we really do? Can the central government do anything? Can the central bank do anything? Could things get worse from here, because the crude prices are continuing to go up? And if there isn't any government intervention, that means everything related to oil or use of any of the oil byproducts will continue to be expensive for us. We say good evening to Dr. Sameer Kagalkar, spokesperson for the BJP from Karnataka, Charan Singh Sapra, spokesperson for the Congress Party, Professor Arun Kumar, Chair Professor, Institute of Social Sciences, joins us this evening, Madan Sabnavis, Chief Economist at Care Ratings, Mr. Tamal Bandyopadhyay, author and consulting editor for Business Standard. I actually want to start off with Professor Arun Kumar. Professor Arun Kumar, just to, help us simplify this for our viewers. I mean, often the minute we say CPI inflation or WPI inflation, I think we lose 80% of our viewers. for the fact that it's so complicated to understand. But what does it mean to a regular citizen?
So, consumer price index is what the consumer pays in the market when he goes to the market. What is the consumption bundle, as is said? What are the various things that the consumer consumes? What has happened to their prices? Are they going up? Are they going down? That is what basically the consumer price index represents. The wholesale price index represents what affects the manufacturers and the producers, producers in agriculture, producers in, the industry and in the minerals. However, the wholesale price index does not contain services. For instance, the increase in the medical costs that have taken place dramatically for the variety of citizens, whether it be the middle classes or lower classes, that would not come in. Similarly, education, the rise in the cost of education, because now with citizens not able to send their children to the classes, they have to arrange for a variety of instruments, etc. So in a sense, the wholesale price index does not represent what the consumer faces. The next issue that is very important is that we have in the economy 94% in the unorganized sector who are not indexed to inflation. So as soon as inflation takes place, especially the consumer price index rises, their real purchasing power starts going down, and therefore they actually fall into problem. And this time around, the problem is greater because large number of people from the unorganized sector have lost not only jobs but also incomes. Even if they have been going to work, their income has been declining because of the fact that their salaries have been curtailed in a variety of jobs. So in other words, when the incomes are curtailed, at that time when prices rise, then you have a double whammy that hits you. Now the question is, could the government have actually done something to try and moderate that? And here comes the indirect taxes. Indirect taxes, tend to be regressive. They fall more on the poorer segments of the population and less on the upper segments of population because their consumption is very low compared to their income. So the poor people suffer more when indirect taxes go up, especially on a basic item like petroleum goods, because then, as you said, all prices tend to go up because everything is transported. Then in agriculture, you have, the diesel pumps running and so on. So therefore, the cost of agriculture goes up. Now, what needs to be worried for us is that, in a situation where demand has declined because production went down, employment went down during the lockdown, and still prices are going up, so that is a cause for worry because as demand comes back on, that would imply that, then the prices would tend to go up even further. So why is it that prices are going up when the demand is down? And that clearly points to supply bottlenecks. There probably are a variety of supply bottlenecks that have taken place. Goods have not been able to come out from, say, agriculture to the urban markets, and therefore it affects the vegetable and the fruit prices, which have been going up substantially. And then the question also has been raised whether GST could be curtailed. Now, the government, is short of resources because taxes are not coming in at that rate at which, the government requires to spend. So the fiscal deficit would tend to rise. Now, in this kind of a situation, the question is, are there alternate sources of revenue? And here, clearly, there's extra liquidity in the economy. The banks are depositing about 4 lakh crores in the RBI at reverse repo rate. Now, that, through some clever devices, through COVID bonds, could have been raised by the government. And then, the petroleum goods prices could have been kept much lower than where they are. So that would have, also controlled inflation. So in other words, especially the unorganized sector workers who do not have indexation and who've lost incomes, for them, this is a double whammy that has come. And that will slow down the recovery of the economy because if demand does not come up, then production can also not rise, and if that doesn't happen, then investment will also not rise to the same extent as it should rise, so that the economy can be boosted. Government says that they are increasing their capital expenditures, but also we must subtract from that the disinvestment that's being carried out because it's the net amount of investment that matters. And the net investment, as slated in the budget, is not as high as it needs to be to boost the economy. So in other words, government's capital expenditure is also probably going to be worry, especially if the government disinvests a large amount, because then that much amount of capital investment by the private sector would not take place. So all told, the situation at this point is quite grim, and therefore what we need to do is we need to relook at the budget and redo the budget so that we can, A, provide support, B, take care of the inflation and try and revive growth in the economy.
You know, you made one interesting point, and I want to first take that point forward, Madan. Usually, in our initial days of understanding the basic economics, you were told that when the economy is doing well, when you are growing, the inflation comes along. But that's not happening right now. The economy isn't really going up to that extent, but our prices are going to that up to that levels. Like Professor Arun Kumar said, could one of the reasons be supply bottlenecks? Why is it that the prices are rising so significantly right now?
No, actually, if you look at it, Tanvi, the supply side is the main cause of higher inflation in India. If you're looking at global commodity prices, they have been increasing all across the world. The reason being that there is an economic recovery taking place, and taking cues from that, we have seen that prices of metals, of edible oils, fertilizers, everything has been increasing, including crude oil. Now, if you look at India's consumption basket, which comes into our CPI, there have been different factors which have been affecting. I think one which both you as well as Dr. Arun Kumar have highlighted is the contribution of the government. Now, I think that's a very simple solution which is there, that if the government starts cutting its taxes on petrol and diesel, you will really see a virtuous backward linkage which takes place, and prices will come down as transportation costs come down. And to the extent that it's added to the higher prices of goods and services and goods in the country, I think we will have definitely a benefit coming from it. If you look at the food components, if you look at it, edible oil prices internationally have been going up. They're going beyond the roof. And then if we're talking of India, we import around 55 to 60% of our edible oil requirements. So therefore, if international price goes up, we are a price taker, so prices have gone up. If you look at pulses, something like tur, urad, and moong, these are the kharif crops. This is a normal tendency before the next crop arrives from October onwards. The earlier stock is getting exhausted, so therefore there's a tendency for prices to go up. And as I mentioned, things like seasonal factors do come into play when we're talking of things like vegetables, fruits. At times, vegetables went up, at times now fruits have gone up. So therefore, there are again supply side issues which are there. We're not seeing any of the demand side factors. So we have a case of a stagnant economy. Okay, we may be growing at 9.5%, but for all practical purposes, we're not creating jobs. So it's not that people are spending more and prices are going up. It's virtually a stagnant kind of an economy which is there. But the supply side factors are not really working through. And the last point I'd like to make is if you look at the so-called core inflation data, most of these products are actually based on maximum retail price. And the sad part is that when the MRP goes up for any product, it could be for my toothpaste, it could be for my toothbrush, it could be for healthcare, medicines which we're buying. Once the price goes up, they never come down again. So it becomes firmly entrenched at the levels at which they are. So therefore, we have this rather strange situation in India where we have low growth. In fact, Tanvi, quite a few people are asking whether this is stagflation. No, it's not stagflation. We don't have negative growth, but we have all the features of stagflation. We have high inflation driven on the supply side. We have high levels of unemployment. We're not really seeing too much of growth taking place. So it's a very peculiar situation we are in. And I think the only solution we have is that somebody has to give in. I think the RBI has also been talking about oil prices. It makes a lot of sense, I think, for the government to actually change its ideology. I keep saying change the ideology because I don't think that we are the only intelligent people here. Even the government knows very well that it can increase the deficit and cut down on your taxes so that even if your excise duties collections come down, you will still have a higher deficit and you'll be able to control the economy. Because as I go back to what we started off the discussion in saying that when there is higher inflation, our purchasing power comes down and the entire consumption story is going to get pushed back on account of high inflation.
Okay, so just taking it as a step further and bringing in Tamal as well on this, Mr. Bandyopadhyay, we've been talking about how to revive the economy. The government needs to spend more money. The government needs to, be the leader in putting the money out there in terms of capital expenditure. Is there also then a concern that even if that happens, it adds to the inflation, which is already, going up?
Yeah, Tanvi, actually, most of the thing between Professor Arun Kumar and Madan has already spoken. So I may end up repeating that. The key at this point of time, the key contributing factor are two. One is the supply side bottlenecks because of that different regions, what's happening in terms of lockdown. So things are not coming. For instance, in Mumbai, you will not find coconuts at this point of time. Very few, because that it's Kerala, it's not coming over there. And prices have gone up much more. It's just a simple example which I am facing at this point. So just to illustrate, you said it, a common person should understand that.
Yes.
So one is the supply side issue. And the second is, of course, the petroleum products. Now, petroleum products, petrol and diesel have only 9%, I think, less than 10% weightage in the CPI basket. But it's wrong to look at that's only 9% because it affects, as you explained in the introduction, it affects everything, the transportation, the production cost, everything. So what is happening now is there are two things to be worried about, and I am completely agreeing with you, Tanvi, is this. Actually, we can see it is first worse situation because one is demand will add up. So maybe to some extent, once this lockdown gets over, and if touch wood, if the third wave does not hit us, and if the monsoon is good, which is expected to be good, normal, then probably the supply side issue would be taken care of. But then whatever space has been created, more than that, it will be the demand side pressure. And the other part is this, WPI, which was earlier the benchmark for as far as Reserve Bank of India is concerned, which was little odd because globally all the central banks look at only CPI, consumer inflation, not WPI. Inflation, Reserve Bank of India has corrected it, and rightly so. But WPI still has a relevance because it's at the production level, and with a lag effect, it shifts through to the consumption level. So WPI going up at 12.94%, at this point of time, we may say, look, there is nothing to be worried because RBI does not look at WPI, RBI looks at CPI, but it will, over a period of time, it's a question of a few months, lag effect, it will shift through to the consumption level. So both on the sides, what 6.3, whatever you have seen, Reserve Bank of India has estimated 5.1% inflation for the year, in different quarters, different. But definitely, as it stands, it would be more than 5.2, 5.1%. Whether it's 5.56, some people are saying even beyond 6%. So we need to, as and when the demand picks up, how do we contain this? And very, very little what Reserve Bank of India can do. Forget about rate cut. It's a question of, you spoke about people are expecting rate cut. Everybody always expects rate cut. Rate cut is not going to happen. Only till we talk about rate hike, technical term unwinding. Now, whether it would happen this calendar year itself, or should RBI wait for February or April? We do not know. I'll not be surprised if this trend continues, despite all the talk about growth, supporting growth, and as long as it will continue kind of loose monetary policy, probably RBI would need to take a relook, and we will see the tightening from December onwards. To start with, the reverse repo rate, which is little technical, not for everybody. But to answer your question, inflation is here to stay, it looks like, even though all of us are praying it's transitory. And that's a globally, even if you have seen that US inflation is multi-decade high, 5%, and people are not bothered, markets are not, even one market doesn't bother, it's a transitory. In India, is it transitory? It does not look so. So we'll see, it might be even inching up from now onwards. And we will see RBI getting back to the unwinding mode or tightening mode little earlier than what we have been anticipating till now.
Than what many would have actually also hoped for. Fair enough. So let's talk about one aspect where the government can do something right now. If inflation is here to stay and prices could go further up, then Dr. Samir Kagalkar, the governments need to step in, at least to begin with some relief in the fuel tax. That's what the experts are also saying. Perhaps now is the time to seriously look at it. Dr. Kagalkar, I think...
Can you hear me?
Yes, now I can. Go ahead, please.
Yeah. Tanvi, it's not just a matter of about one item, be it a fuel or a food price increase as such, right? When we talk about Chidambaram's tweet, it always is a pleasure to read a tweet by a person no less than Chidambaram. You know, it's like a person who pinches the child and tries to rock the cradle as well. On the one hand, he's the one who advocates very strongly printing of money, printing of the currency. On the other hand, tries to speak about 6%, 6.3% inflation as a mismanagement of the economy. I mean, 10 years ago, if you were to look at secular trend of the economy, the last 10 years, forget the one this current year and the previous year, which is a once-in-a-century pandemic, you get to see that UPA under Chidambaram's leadership as well in the finance ministry had hit the inflation rate close to about 12%. And by the time they handed over the power to the NDA, it was close to about 10.5%. Right? Since then, the Modi government has been making every effort in terms of unshackling the economy, making sure that the supply side is strengthened and therefore the supply-driven inflation is under control, notwithstanding the fact that there is a growth and a bigger push in the demand, right? That said, if you look at the current context, if you take the example of what happened the last year as a precedent, we had a complete shutdown of the country, unlike this year. I mean, this year was far better given the fact that it was regionally customized. While there was a good amount of overlap between large number of states, it was not like the last year, where it was a massive, complete shutdown, right? If you look at what happened last year, complete shutdown, supply chain breaking down completely, taking time to sort of restart. There was a spike in the interest rate, inflation rate, but at the same time, you got to see that by the time it stabilizes around October, November, the inflation rate started going downward. It was a good, strong sign that the economy has been strengthening not only on the demand part of it, but the supply side was being strengthened and ensured that the supply push created inflation is very much under check and control. If you look at what happened this year, a similar situation unfortunately has unfolded. There's been, as Professor rightly pointed out, a big hit in terms of healthcare expenses. There has been additional expenses in terms of the education. So all these things that generally is captured in your CPI, once you start looking at a 6.3, it is definitely not a pleasant number, but when compared to what it was at 12% 10 years ago, 8 years ago, this is definitely not a panic button situation yet.
At what point will you press the panic button, Dr. Kagalkar? At what point will the government press the panic button? Are you saying that now is not the time to even consider it? Let's just bear it out and see where it goes?
So our policy has always been done on an evidence-based policy kind of a thing, right? Driven by the evidences as such. We'll wait for a couple of more months. The unlocking has just about started last week. We'll wait for a couple of more weeks and a couple of months to see how the supply side re-strengthens itself, right? As Professor and the other panelists rightly pointed out, this inflation spike has got very much to do with the supply chain breakdown. But the point to note and reiterate is this breakdown is an absolute temporary phenomenon, exactly the way we saw last year. Once the supply chain comes back, the Kerala coconut coming to Mumbai, for instance, as Mr. Bandyopadhyay rightly pointed out, right? You don't get to see this kind of a price hike in any of these kind of items. That's number one. Number two, a point was raised with respect to the fiscal deficit part of it. When it comes to the fiscal deficit, let me take it two levels. One is the fiscal deficit per se, and the second point raised by Professor on the capex part of it. Fiscal deficit, the government is committed to ensure to open its purse to whatever extent it is required by the economy.
Okay.
Right? There is no way that the poor will get hit. There is no way that under whatever circumstances, the country's poor and the needy, whatever is required as their obligation by the society, will be catered to them. Now, the point is, if there is an increase in the fiscal deficit, will there not be a big spike in terms of?
So let me before you go on to the fiscal deficit part or how much government spends versus what they earn. You gave the coconut example, okay? Granted, like the experts say, one part of the problem is the supply side, which we hope that as we come out of second wave and unlock, some of those issues get resolved. But Dr. Kagalkar, and before I go to Charan Singh Sapra, the issue is that I may get the coconut in Mumbai and Mr. Tamal Bandyopadhyay may be able to buy it in a week or so. He will end up paying at least 65% higher cost. That's how much the fuel's gone up in the last few months. It will definitely still be a lot more expensive because it takes additional money to transport it from Kerala to Mumbai, isn't it?
No, I don't know where you're getting the 65% additional price from the
The fuel price rise in the last 1 year?
It need not necessarily be translating into a complete password to the consumers, right? In which case, then probably you'll be seeing a similar hike and a stability.
You get the point that I'm making. It will still be more expensive because fuel prices have gone up.
It, as I pointed out, and every one of the panelists have been repeatedly pointing it out, it is a matter of a temporary blip due to the supply chain breaking down due to the lockdown. Now, come next couple of months when the lockdown is unlocked phase-wise and the supply chain stabilizes fairly well,
okay,
this disparity primarily only due to supply will get under control. For example, other factors, international pricing, for example, may not be factored in even if your supply chain gets controlled, right? So the international price of the fuel will still be a point of concern.
Correct.
That said, once the kicking of the economy happens in a way wherein you're able to not only stimulate the supply part of it, but the demand side part of it as well, there is going to be a situation what we saw.
Yeah, but
last
what
year
happens in our
around
economy
December.
and our supply side doesn't decide which way the crude prices internationally are headed, and that still continues to be a big concern. But okay,
Undoubtedly, yes,
let me
that's
bring
outside
in
of our
Charan
control.
Singh Sapra here. And Mr. Sapra, the point that is being made by the BJP is that what are you telling us about how high fuel prices or even inflation? Have you forgotten the state of economy and the inflation levels when your government was in its last tenure?
See, Tanvi, I feel that the BJP is totally confused as far as the current economic situation is concerned. They have, actually failed to tame the skyrocketing prices, whether they are the fuel prices or whether they are the prices of the essential commodities. The rupee has depreciated, so hence the prices of all the essential commodities or maybe fruits or travel or transport, everything has gone up. Now, like the BJP spokesperson was trying to compare the current scenario with the last year's scenario, let me point out that they should take into consideration the sequential difference. Like the WPI or the CPI is continuously increasing since last 5 months from January to May. This has to be considered. They should not cherry pick. They cannot compare what happened last year and what is happening today. So they need to do a correction there. And fuel prices, they need to do something about the fuel prices. And also, I feel if they plan to bring it under GST, that will be another value addition to the current scenario whereby we can reduce the fuel prices. Correspondingly, we can bring the inflation down, whereas we have been seeing since last 3 or 4 years that there has been a low demand, there has been a low GDP, there has been a high inflation and high rate of unemployment. The current data of CMIE says that in the month of May, we have lost nearly 1.5 crore jobs. So it is going to be a ridiculous situation in the days to come. Things are not going to be easy the way BJP spokesperson is saying. And you rightly explained to him the coconut part, like that coconut which will come to Mumbai after a few days when the things get sorted out. Still, it will be a costlier coconut. So BJP needs to come out of its dream. They need to actually work on the table and consult various economists so that the situation in country should improve.
And we just want to add in one quick point
Yes.
here. I fail to understand as to how people either don't understand or intentionally try to misinterpret. There is a lockdown. The entire country is down without any economic activity, and it's but natural that you see a big spike in unemployment, right? And once the unlocking happens, it's only but natural that the SMEs, that the individual traders, that the people who are working...
There has been continuous unemployment. Unemployment figures you see. You see the unemployment figures since last 4 years.
Okay, Mr. Sapra, let him finish his point, please.
I never disturb you when you're talking.
Yeah.
I never disturb you when you're speaking.
Yeah, come on.
So
Let's talk some relevant points.
When it's an absolute reality that when it's in the peak of the lockdown that there was a dip in employment, the same thing holds true inverse. When the lockdown is removed, when the unlocking happens, when the economic activities, the wheels start moving, it's only but natural that the employment will increase as well. It's as simple as that. Denying that it's a tough situation, making a big thing out of it by cherry picking is something that's not expected out of a serious political party.
Okay, so 30 seconds to Mr. Sapra, and then we will go back to the experts. Yeah.
Let me point out to the BJP spokesperson and to the viewers that the current lockdown was not a harsh lockdown like what happened last year, what Modi government did. It was not a harsh lockdown. So there should not have been so much of unemployment. You should note this point. But the central government needs to work on it, how the employment opportunities should increase. Are you not liable to think on those points? And not only thinking, but you should have acted in advance.
No, so let me just say this. Okay, let me just say this. For what has happened in the last couple of months, obviously nobody is blaming the central government. Even then, this is the stark reality. The reality is that the second wave and the second round of lockdowns has just, impacted our economy further, an economy that's been down and out for 1.5 years, and we were hoping to gain some recovery right now, and that's put us back again. So, Professor Arun Kumar, I come back to what should the government do? Should the government just play the wait and watch game and hope that as states unlock, some of these things just improve by themselves?
So, Tanvi, the situation is very uncertain, and I think what we need to factor is the uncertainty. We didn't expect a second wave, we became very comfortable with it, but it came. There's also a fear that there could be a third wave very quickly, maybe by August, because large number of people are unvaccinated, especially the younger people and the children below the age of 18. And if that happens, then I think, the recovery would be very slow. We already know that consumer sentiment, as far the RBI's data is concerned, has fallen further. It had fallen to 55, from 105 last year. By January 2021, it's fallen further to 53 as per the latest data. Similarly, the capacity utilization in industry, and this is about the organized sector actually, that has fallen to 63 by January 2021, and it's fallen further and probably is closer to 50 at this point of time. And therefore, in a sense, investment is going to be low. Demand is going to be short because you see the inflation is cutting into the purchasing power, and therefore that's going to be further creating a problem. So in other words, the recovery is likely to be slow, and that's why the problems will continue to mount in the coming months because there may be temporary lockdowns, there may be selective lockdowns, etc., which will keep disrupting the supply chain. Another important factor is that the manufactured goods prices at the wholesale level have been rising quite rapidly at this point of time, and this probably is because of the pricing power that industry has. And once the MRP goes up, it doesn't come down. So in other words, the prices may not moderate in spite of supply bottlenecks easing. And some industries may complain that the labor is short because labor hasn't returned from the rural areas, etc. Those kind of situations will also be there. And then, regarding the GST, can petroleum good be brought under GST? My argument is that it won't, because it's a cash cow which both the states and the center want to milk. And, if they'd wanted to cut, they could have already cut their excise duty and VAT. If they're not willing to do that, then why would they be willing to put it under GST? So I don't think petroleum goods prices are going to come down. Finally, I would say that the fiscal deficit, should not be that much of a worry. It is always a worry. I'm not saying that we should go the US way, where the fiscal deficit has been raised by 10 to 12% of the GDP in the last 1 year. But even if you can raise it by 1 or 2%, then at least you can lower some of the indirect taxes and then bring the prices down of some of the items of common consumption, especially like petroleum goods and other things, and raise funds through COVID bonds and through capital gains on the stock market, where the price of shares have gone up very high. So some of these innovative things should be done. And of course, the central government needs to reformulate its budget, because the budget was slated on a 15% increase, a nominal increase, but that's not going to materialize. And therefore, the revenue projections and the expenditure projections are going to be, proved to be wrong. And therefore, we need to immediately do something on that and cut back on, wasteful expenditure wherever there is, so as to save resources, and then cut back on the indirect taxes, so that the inflation can be moderated and people can be helped. Without doing all this, the economy's recovery will be very slow, and therefore the positive gains that could have come from a faster recovery, those will also not materialize very quickly.
So it's a tricky situation. It could get further complicated. There is so much of uncertainty, Madan, which is around us. And honestly, there's only so much that even governments can plan at this point. But you earlier raised an interesting point about, many saying, is this stagflation? And maybe not exactly in the technical terms, but we, somewhere there, we have lesser money, and that's also worth much lesser now. That's essentially the situation we are staring at. So what can the government do if tinkering with the fuel tax is not an option?
In fact, I think as we have discussed item-wise about why the CPI has gone up, I think that if the government is not willing to cut down taxes on fuel, there's very little that the government can do. So we will just have to live with this high number, and maybe at some point of time, the base effect will catch up, and then therefore we'll have lower CPI inflation numbers. Now, to my mind, again, I'm talking of something which probably will never be done. I think the right thing for the RBI to do would be to increase the interest rates. Because, so far we always look at the interest rates from the point of view of the borrower. Why don't you look at it from the point of view of the saver? Because today, for example, if I put a 1-year deposit, what do I get? I don't get more than 5% interest. My inflation at 6.3, I'm running at minus 1.3. In fact, as a saver, there's no authentic information, but generally it is felt around 25 to 30% of my deposits are being held by fixed income earners, meaning thereby they're the retired gentry who just live on that interest. They're actually affected by cumulative inflation, not just by current inflation. So the only thing is that if you can increase interest rates, look at the savers, you could probably be increasing the purchasing power. So as we are seeing inflation going up, if you keep increasing the numerator also, then you can probably preserve some part of their real disposable income. Otherwise, I think there's very little that we can do right now because every item of your CPI is being driven by different factors over which the government has little control. As what Dr. Arun Kumar said, if you're not willing to touch your GST, we don't want to touch the fuel taxes, then basically we have to just sit back and hope that nature takes care of these inflation numbers.
No, so let me emphasize this again and ask you to emphasize on this again, because you did say it in your first answer. We can't deny the fact that, the high fuel prices play a big role. It's not just the supply chain. They do play a big role, and crude prices have been going up worldwide, and I don't think they're going to be moving in the reverse direction anytime soon.
Yeah, absolutely. So, in fact, my view is that I think we should not be exaggerating the supply distortions because of the lockdown, because I think there's been no impediment put on the free movement of goods and services, especially of goods. Maybe for services, yes, but otherwise, there's actually been no embargo put by any of the states. Maybe as some of us are talking about coconuts, yes, there will be definitely a certain kind of disruptions taking place, but more at the margin, it's not generally a rule. So I wouldn't like to overstate the case of saying it's because of supply distortions, because of the lockdown, which has created prices to go up. There is a fundamental supply shortage of every commodity which we are talking of, which has led to higher inflation. Or maybe the producers have been pushing up. If we talk about things like education, recreation, I mean, if I'm operating at 40% capacity utilization before the second wave came in, it's but natural that people who are running theaters are but natural to increase the prices. The same thing has happened for hospitals. The hospitals have been running losses because they were forced to take patients at the COVID rates set by the government. So now once you're giving them freedom, they will tend to increase all the prices of their rooms, and that is what gets reflected in your CPI. So I think we have this situation where there is high inflation caused by different factors, not just the government causing it. It's being caused by intrinsic factors which are specific to the product or the service which we're talking of. And the government can do only that much. But if it does that much, I think that will have definitely some kind of a soothing effect on overall inflation. So cutting taxes, to my mind, is the only practical thing. But we have seen that as the petrol price went up from 80, 85, 90, 100, it looks like that they are quite okay with the price going 100. In fact, I think one of the statements made by the government officials was that on account of this, they're able to collect more excise duty, which is going for food relief for the poor. So therefore, what is wrong in it? So if that is a logic taken, then I think we can expect less from the government at this point of time on inflation.
Okay, so I mean, and that being said, like there isn't much that the government can do at this point. Dr. Kagalkar, you wanted to make a point before I go to Mr. Tamal Bandyopadhyay?
Yeah, a quick point on stagflation as well as the long-term strategy for fuel. Let me take the fuel part of it. If you look at the last few years' developments and probably the kind of fast tracking that we have been doing in terms of ethanol blended petrol, right? From where we had targeted a 20% blending by 2030, we've already advanced it to about 2025, 20% of it being blended with ethanol. All that you're trying to do is have a long-term vision as well with respect to the prices on which you have no control, the international fuel prices, right? So you're working not only at the immediate term, but the medium term as well as the long term as well. That's one. Second thing, with respect to the stagflation part of it, Madan did make a point on it. At this point in time, we are nowhere close to being anywhere closer to a situation called stagflation, right? As I said, we have seen a worse situation last year. Nowhere did we come closer to being in a stagflated economy. No way do we see anywhere being closer in a stagflation as we are talking today. Yes, there is a blip, yes, there is a tough situation. As you rightly said, it's not just about an uncertain situation. Generally, the startup world speaks of a VUCA world, volatility, uncertainty, complexity, and ambiguity. If at all any one of us had to sort of really experience this, the last 15 months, 16 months has been something that's taught all of us what is a VUCA world. In this scenario, taking a decision with a bit of a conservative nature, ensuring that we are keeping up on the supply front, at the same time ensuring that the demand doesn't drop, is the best way ahead. And of course, finally, every policy is decided by the evidence on the ground, and we are committed, and we shall stay committed to the fact that evidence will decide our policy next steps as such.
Okay, that's as far as the government is concerned and the options that the government may be open to looking at. Mr. Tamal Bandyopadhyay, I know you said there isn't much that the RBI can really do to fix this, but at what point will they seriously start looking at drastic steps?
No, again, I repeat, I think RBI has done whatever it could do, and it's reasonably well it was done till now. Even the way inflation is going up, and if it is not transitory, if it continues to be, because as I said, if the supply side bottlenecks have not been addressed to, and then we add to the demand pressure, then and if it goes up and also the WPI sips through in due course with a lag effect, then definitely it's going beyond 6%, which is the RBI's band. You spoke about RBI's band, which is 6%, between 2 and 6%. So in that case, I think the ball is clearly in the government's court. And if you look at Reserve Bank of India, which is pretty conservative about talking about the government under the current RBI governor, you will find rarely RBI talks about the government role, but last policy, which is the June policy, where RBI did talk about government should look at, among other things, cutting down the taxes on petrol and diesel. So I think Madan also raised a very important point, because technically what you had, Tanvi, in your pocket 100 rupees last year, now it has become 94 rupees, less than 94 rupees, and on which if you keep it in savings bank, you get 3%, so 97 rupee. And if it's a fixed deposit, even then you can't get the money what you had last year. So your value of money got eroded. And that's a concern from the savers' point of view. How long would they continue to have this kind of situation? So we need to contain it. So one way of looking at it, just hoping for good monsoon and hoping for things will get better and it's transitory. And the other way of doing certain things. And one of the things is certainly cutting down the petrol and diesel taxes. As Professor Arun Kumar has pointed out, and I heard Amit Mitra, West Bengal Finance Minister, Dr. Amit Mitra talking about, he was ruling out, and is rightly so, as Professor Arun Kumar spoke about, that neither state nor the center would agree to bring it under GST, because that is the cash cow. And if you look at the tax on petrol and diesel, if I'm not mistaken, globally, this is the highest in India. Globally, and in absolute term also, I think at this point of time in India, it's definitely US, if you say per gallon in dollar and in our case rupee, or you look at Pakistan, at least these two instances I'm talking about, it is marginally less than, US is marginally lesser than ours, Pakistan is much lesser than ours. So I think it's high on the agenda, not waiting for long, cutting down the not allowing it to rise anymore. That should be the first on the agenda, come what may, if you want to address. And then, of course, the other things like investment and all, because again, we have not seen, we have first quarter only, of course, first quarter over, market is so gung-ho, but is the government, what's happening to the divestment, privatization policies on the LIC IPOs, etc., etc. These are the ways of raising money in the budget. And Professor Arun Kumar repeatedly said that budget has to be reworked. Yes, certainly, because what happened the second wave, which was not accounted for in the budget, like the last year's budget, what happened is this COVID attack came after that, and that's why we saw a new budget through the series of the 5-day or 6-day announcement by the finance minister, day 1, day 2, day 2. It's basically reworking the budget, keeping in mind COVID-1, and similarly COVID-2 now again. Even if we presume that there would not be COVID-3, we were so alert, but budget has to be reworked. All the numbers have to be reworked. And the key of this is, it's not an economic problem. It's not the 2008 global financial crisis. It's not an internal, the current account deficit, what can be addressed financially. It's a health issue. and it's very uncertain. So the one thing apart from doing everything else is the mass vaccination, having the right every Indian vaccinated as early as possible at the fastest possible time. That's the way we can create a sort of, we can weather out the uncertainties to some extent, and then address is through economic, through other ways, which is conventional economics demand. But the first thing is addressing the health issue.
Oh, yes, absolutely. You know what you said, but when it comes to vaccination, there is only so much that we can increase the pace. I mean, we've had series of conversations and the options that the government can look at and what can be done. But even if we had to go by government's own, extremely generous estimates, that would still happen that a majority of people only get vaccinated by December. Even if we go by that estimate, which is still a long way to go, this entire year will essentially be a washout even then. I am completely out of time, but Professor Arun Kumar, you wanted to make a point. Last word to you.
So very quickly, how to raise savings in the economy, because that will help, to moderate, the problem that is coming in from the demand side. We can talk about certain segments losing out on their savings because the interest rates have come down. But unless investments go up, savings don't go up. And this is the problem, that we face, that in the short run, how to raise investment. It's all very well to say that investment will rise over the long period of time as demand recovers. But if the demand doesn't recover today, then investment will not go up. If investment doesn't go up, aggregate savings will decline. And then the problem in the economy will continue as we see. And the RBI is already printing more currency. Cash in circulation is rising. It has risen to 28 lakh crores. At the time of demonetization, it was only 18 lakh crores. So it's not that we need to print more currency, but it's how to generate demand. So I think when people say print more cash, what they're saying is how to finance the deficit. And the financing the deficit, again, what we need to do is, again, be very innovative. And as I said, use COVID bonds, borrow more, borrow at least 1 or 2% of GDP more so that you can lower the indirect taxes. That's the best way to try and boost demand. That's what we did in 2008 when we cut the VAT at that point of time to boost demand. So I think we need to be much more innovative in our approach.
And a multi-pronged approach. You have to see it from various aspects. Let go of all your, conventional norms that you've observed and followed earlier, because this is an unprecedented situation, but something needs to be done. A big thank you to all of the panelists who have joined us right now. Viewers, this is why this is such a tricky situation, because not only have we now gone through 2 cycles of lockdown, we've also gone through a big impact on our health, on our, family's health, on our own mental health because of it, which also adds to the stress. And as we now struggle to recover from all of that, everybody knows there is a lot of uncertainty related to COVID. Everybody knows that vaccination is still going to take some time in terms of getting a majority of the population vaccinated. What do? The government is only hoping to buy time till then, somehow sustain till then without having to take any drastic steps. All of that will go flying out of the window if inflation doesn't come under control. All of it will turn into a massive, colossal disaster if you're not able to stop prices from rising at such a fast pace beyond this. Which is why it's extremely important that the government and the experts get into a huddle and look at various options of what can be done. The demand is already down and out, which means that we are not buying as much as we should be. And whatever little money we do have, its value is now also decreasing. Our outlook, economy, jobs, business-wise, isn't that up and about either. This situation needs a jump start, a booster shot, something that the government can only provide at this point. Thank you so much for joining us.